It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
Hey, welcome back to another episode of the Real Estate Breakfast as we talk your property news 7 days a week. Yes, for this brand new year of 2025. You can hear us on iHeartRadio, Spotify, Apple Podcast and Amazon. I do say that regularly only because we've got new listeners joining us all of the time. Are you still on holiday? If you are, lucky you. Most of us are working. Wednesday today, the middle of it, January the 22nd. Capital cities are continuing to rise, and we'll be talking about Perth in just a moment. CoreLogic data highlights impressive growth in the top performing capital cities. Perth, that is definitely on the positive side, 19 and change in positive column. Adelaide 13.1% positive and Brisbane 11.2% positive. Sydney experienced modest growth of 2.3%, while Melbourne, Canberra and Hobart saw slight declines in home values. In regional areas, Western Australia also led with a 16.1% rise, followed by South Australia at 12.5%. And Queensland at 10.5%. Queensland is still going great guns. In fact, regional areas along with the capital cities are going to be an interesting space to watch this year in 2025. Side by side, watching them to see what happens when we see these rate cuts coming into force this year. Well, right now, as I said, we're going off to Perth. Matthew Hughes is here again for the very first time in 2025. He is the Managing Director from Capital Property Advisory to look at the Perth property market. So much talked about, Matthew, last year, mulled over, chewed over, spat out, pontificated about, and another year brings a whole lot more of chatter about WA's state of the market. Good morning to you. First off, how was your break?
Welcome back, Craig, and Happy New Year. The break was great. It was pretty hectic, as we were talking about earlier, with a couple of young kids, and we hosted our family, but Christmas was fantastic. New Year's was good, and then it was straight back into the office after the first week. We're just that busy at the moment. The extended break wasn't on the cards this year, unfortunately.
Oh, well, that's just property, I guess, in terms of being one of the owners of your company there in Perth. Let's kick off with the new year with your insights and predictions for 2025. And starting with the topic everybody's talking about, and that is interest rates. When is the first rate cut going to happen, and how many are we likely to see? It is a guessing game that is being played out all across the country at the moment. Matthew, what is your takeaway on it?
Look, last week I was feeling pretty confident that we were going to see a cut from the RBA in the Feb meeting. Then the jobs data came out on the back of the inflation data. So the inflation data obviously looked good. The trimmed mean inflation had dropped from, I think, 3.5 to 3.2%. And I thought that was going to be enough to get the RBA to take some action at that next meeting. The jobs data then came out and looked very strong. And so that could be a bit of a sticking point for the RBA. But I think I'm going to stick with my prediction that I was sort of confident on last week, which is I think there will be a cut of 25 basis points in Feb, and I think there'll be at least 2 more cuts later in the year, and we'll see the cash rate come down to at least 3.6% by the end of this year.
Yeah, if your interest rate predictions hold true, how do you see the WA market performing in comparison to other major capital cities in 2025?
Look, there's still a lot of variables, obviously. So, look, if my prediction does come to fruition and there is 3 cuts next year as a minimum, then I think Perth will... Look, either way, I think Perth's probably going to be the standout performer again this year, but I think the gap to second and third place will be less so. I think it'll be closely followed by Brisbane and Adelaide. Adelaide, but I do expect Adelaide to start slowing ahead of the other two with their population growth being at a lower level. Their new dwelling approvals are starting to trend up, so a bit more supply coming into the market. And I think just because of the lower incomes in Adelaide and South Australia, I think they're certainly closer to an affordability ceiling than the other two cities. And then with the other East Coast cities, I think Victoria, where we've just started buying for our clients, I think that will bottom out in probably Q1 or Q2, depending on the timing of rate cuts and the frequency and how deep they go. But I think this will probably start a slow move in a positive direction by the second half of this year. I think first home buyers and investors are going to really start to drive this market from the ground up, like we saw in Perth recently. And then in terms of Sydney, obviously still very unaffordable. Median house price is very high. I don't see 2 or 3 rate cuts really doing much for Sydney in terms of affordability, and in comparison to the cheaper markets at least. So I think it'll probably keep its sort of slight downward trajectory for a little while this year and just have a cooling off period. And I think there'll probably be a slow recovery towards the end of the year if we do see those cuts that I've been talking about, and they'll probably finish just slightly positive at the end of the year.
Yeah. Well, I don't know if this happened to you or not. Over the Christmas New Year, I can't tell you how many people asked me, how many of these rate cuts do you think that we're going to get in 2025? Like, because I kind of work in the industry along with you, people think that, you're an expert on this, that you have the magic formula. How many people asked you? I bet you had that asked, over the Christmas New Year break.
Yeah, it always comes up in conversation over a drink or at a dinner party. Australians love their property, so they're always keen to talk about it. I'd rather try and avoid talking about property when I'm at home, and we think about it enough at work. So it's happy to help out friends with a bit of advice here and there. Yeah, it's something I do try and avoid where possible.
Yeah, that is the thing though, isn't it? Australians are absolutely obsessed with the property market. If it's one thing that I've been doing this job as long as I've been doing it, it comes through so clearly, the passion that people have. And now, of course, looking towards the rate cuts, that passion is fueled by, we're going to save some money in 2025. And that kind of brings me into the space of when we start a new year. There's always time for reflection and adjustments for people to make. And looking specifically at Perth, what challenges, therefore, do you foresee for home buyers and investors this year?
Yeah, I think, look, specifically for investors, and it applies to home buyers a little bit as well, but I think the challenge is going to be finding value at the affordable price points if you're looking to buy a house. There's not a lot of places in Perth that I'd be comfortable putting either my own money or investors' money into in Perth at the sort of sub 600, 650 level at the moment if you're looking for a house. And so while I still think there's growth to come and those price points in that bottom quartile, I think the downside risk in certain suburbs that have been driven by investor activity to this point, I think there's a scenario where you might end up with get another 10, 12, 15% growth in this cycle if you're buying now, but you might end up giving back more than that when the market softens and we finally find ourselves in a higher supply environment in the future. I also think that there's another risk worth discussing or another challenge, and that's new construction. So I think many months ago we spoke about this and I predicted that whilst we are going to see an upward trend in terms of new dwelling starts and approvals, and the appetite for construction has sort of bounced back, and still not to the level we needed in Perth, but it has bounced back. And as predicted, it's put a lot of pressure on our workforce. So anyone who's considering building new versus buying established probably wants to get a really clear understanding of the worst case scenarios in terms of what might happen from a cost and time frame blowout perspective, because they're definitely trending in the wrong direction again. And those who aren't well equipped to fund all the holding costs, if your construction time frame blows out by 6, 9, 12 months, could find themselves in a tricky situation.
We are talking with Matthew Hughes there in Perth this morning. We'll come back with some more property news from WA after this.
Every morning from 6 a.m, we bring you the latest real estate news with diverse perspectives from leading industry experts. We deliver the most property podcasts across Australia every week.
And right now it is time for another 30-second property tip. Let's go back to Stephen Devine, who we spoke to recently. He's a property partner at the agency in inner west of Sydney. And good morning to you, Stephen. What have you got for us this morning by way of some property information?
Thanks for the opportunity to chat. Look, I'm very passionate about what I call the life cycle of property. And this is maybe a gross generalisation, Craig, but too often people just think about the immediate purchase that they're looking at and not looking at the life cycle of property. And what I mean by life cycle, typically people end up their first home is a small unit because that's all they can afford. Then again, maybe 5-7 years later, another kid comes along, that's too small, they go to the big house. And typically that's where people spend their most time, 25, 30 plus years in our area. Then kids leave home, they go to a small house, then they end up in a small unit, then they end up at Rookwood. What people need to be focused on is not necessarily the immediate purchase when they're buying a first home. This is just a stepping stone to get me into the next home, which is a stepping stone to get me into the big home. And the big home is quasi-superannuation fund. When you sell it, it really sets you up for your future.
From powerful and up-to-date news to professional real estate experts with the latest property trends on the Real Estate Podcast.
It is a Real Estate Wednesday and we are in Perth talking with Matthew Hughes. I've got to say, Matthew, you are not the only commentator out there who is telling people they should exercise some caution for the budget-conscious investors in Perth for 2025. Perhaps you can guide our listeners on why they should tread so carefully this year.
I've alluded to this previously. I think WA's got a lot of growth potential ahead, but I think the performance this year and into next year will differ at the various price points. I think the middle pricing sector, the middle sector of prices and the upper sector moving into the luxury end, I think they show the most value currently and the most promise over the next year or two in terms of potential growth. And so I'm just encouraging clients who have lower budgets, if they're not too yield sensitive as well, because obviously yields are lower and costs are a little bit higher in Victoria. But if I was investing 500, 600, maybe even up to 657, if I was doing that at the moment personally, I'd be putting it into Victoria. I just believe that the potential upside over there at the moment in the next 3 to 5 years will outweigh what you can achieve in Perth at the lower end of pricing at the moment.
Yeah, so all roads kind of lead to Melbourne is something that you've been saying for a while now. And as far as WA is concerned in Perth, we love to look at different suburbs in terms of how they track. So which suburbs in Perth do you expect as potentially standout suburbs and performers in 2025?
Yeah, look, as we discussed, I think that middle pricing sector is going to be where we start to see a lot more demand and competition and price growth. So that $1 million to $2 million, maybe a little bit more, where you've got families who are sitting on a ton of equity. They, with a rate cut or 2 or 3, get a little bit more borrowing capacity, and then they can start looking at planning that move into either their aspirational suburb or a more aspirational home. So I think those upgraders are really going to activate and start to drive that middle sector, and then I think it will move its way up through the market into the luxury end over the course of the year. But suburbs like inner city suburbs like Subiaco, where our office is, Leederville, Mount Hawthorn, North Perth, I think they're all still representing really good value. They're very in demand for families who want to get into good school zones. And then I think in the more sort of affordable area, there is still some value in the Northern Coastal Corridor. We're still buying in areas like Heathridge and Merriwa. They still look good to me and have a lot of potential for growth. And then any suburb, of course, that falls into the catchment area of a well-regarded public school is going to do well this year as well. So parts of Inglewood, Mount Lawley, Duncraig, Corrine, Willetton, Rossmoyne, these suburbs where you can get into a very highly regarded state school and not be paying $20,000, $30,000 or more a year per child for a private school. That's going to really activate this year as well. I think we'll see, even though they've had good growth already, I think they're going to continue to have some strong demand from all those aspirational upgraders trying to sneak into those school zones.
Well, there you go. We call him the expert for a very good reason. He is right across the Perth property market. You go and have yourself a fantastic Wednesday, Matthew, and look forward to chatting with you in a few weeks.
Thanks, Craig. Talk to you soon, mate.
We connect you to the best real estate information across Australia. The Real Estate Podcast.